When I started the broadcast a few minutes ago, my system froze, so I had to actually hard reset it. I'm having all kinds of issues today. So at any rate, I hope you are doing well. I hope you had a good day today. It was a pretty good day, mostly from two symbols for me, three symbols. And one of them was the WTR. I'm just reopening my platform, so hold on just 1 second. One of them was the WTRH, which was played twice in the morning and the afternoon. So that was very, very nice. In the morning, it showed us the perfect breakdown. It was quick. You had to get it quickly. The perfect breakdown. This wasn't the perfect breakdown, but it wasn't the perfect picture of the perfect breakdown. What I mean is the best breakdown that I know of, my favorite breakdown pattern of all time, is when the stock bounces, goes back down to the lows, and bases at the lows, and then breaks down. So that's what we have here. But it wasn't ideal because we didn't have much of a base. It was just 3 bars or something like this. So that was a really nice short. Initially, I thought I was going to give it all back, and I put my stop in the system and restarted this morning. Remember this morning? I had to jump off the mic, and I had, I think, 6,700 shares in it or something like this. I got out at the bottom, pretty much at the bottom. And then this afternoon, we reshorted on that sell. Now, I didn't do the sell setup, but I waited for the 1, 2, 3 under 68 by 78. And that was nice. It wasn't that big of a winner this afternoon. Morning was good. This was pretty good too in the morning. 1 penny base. Now, why do I gravitate towards these 1 penny bases, 2 penny bases? Because they give you a tight stop. So you can have a lot of shares. You can get a lot of shares. And if the stock just drops 10 cents, you could make a lot of money. Does that make sense? And this thing just dropped and dropped. It was pretty nice. This morning, I tried it this afternoon too, but I only got filled, I think, 150 shares. Remember this afternoon? I tried it, 150 shares. It didn't go anywhere. And then the CCL, the scalp, those were the 3 main plays for me. Every platform that I had opened, I had to restart, so now I need to reopen E-Trade. But those were the 3 that accounted for most of the money today. Just reopening, logging it in, reopening my platform. I really don't like tech. Nobody does. Tech issues. This is opening up. So those were the 3 that made all the money today, I think. So it's opening up. It's just opening up. There it is. WTRH number 1, CCL number 2, and GSKY number 3. And then everything else was small. I had an idea where I would keep. I have a scanning system that I don't always have on, but I'm thinking about keeping it on at all times in case I have any tech issues. Then I can just switch gears because I have the same platforms. I have everything installed on this scanning system just as backup, but it's not on. So I'm thinking about having it always on going forward. At any rate, I wanted to talk about a couple of things this afternoon. First being, you guys kept asking me about what? About the hotkeys. So what is it that I do? How do you build hotkeys? So let's go to the settings, and then I'll open E-Trade Pro 2. But I'll show you. It's very similar to every platform. Most platforms are set up the same way. You can set up the hotkeys the same way. So you go, in this case, you have to find the menu for the hotkeys. In Sterling, it's under View, Settings, okay, and then hotkeys, okay. But other platforms, you just have to locate the place where you can edit or add hotkeys. So what I do is go add, and then, so this is what comes up, okay. What I like about Sterling, one of the things that I like about Sterling is that it allows you to not have to specify the quantity. So basically, for me, I pick current, which means whatever is specified in the level 2 window. So that's what it is. Now you can, if you want to pick, come up with a quantity like 500 shares, 1,000 shares, 1,500 shares, specific quantity. But what I like about Sterling is that you don't have to specify. This way you can build one hotkey for all your long plays, one hotkey for all your short plays. And then where do you specify the quantity? Well, in the level 2. So let's say Bank of America. So this is where this is the quantity field in the Sterling level 2 window. So as long as you type it in before you press the hotkey, then it should go through. Does that make sense? Other platforms require that you specify the quantity in advance. In Sterling, that's not required, which is great, because this way, as I said, you can have one hotkey for all the longs, one hotkey for all the shorts, pretty much. Click on add quantity. I just pick current. Okay, and again, current means whatever you currently have in the level 2. Symbol also current, and then the price. So when playing long, I pick the ask and then as my price, but also for slippage you give it 3 cents maybe. When I'm scalping, I have a hotkey for just add the ask, and then here I'm just using the arrows. So arrow up adds a penny at a time. So that's at the ask plus 3 cents. Account, whatever account, either any of these would work. Default, current, or I only have one account. So T3, whatever it is. Okay. Destination, that's the route. So if you don't know about routes, so for example, I like to use market maker routes, because market maker routes, while the fills might not be as good, if your stock is on an uptick, you often get filled better, or you often get a fill, versus ARCA or a direct market route, an ECM route. Those are expensive, and they will send it directly to the exchange. So I like to use market maker routes such as the IT, whatever you have available. I have ITG, which is a market maker. I have Credit Suisse, CRES. I have a couple of other wheel routes, such as the Buzz is a wheel route, meaning it sprays your order to multiple market makers. Now, a lot of platforms don't even give you the functionality of choosing the destination. So if it just gives you, smart or auto, then go with that, because smart or auto basically is a wheel route. So it's like Buzz in Sterling. So it sprays your orders to the different market makers. Okay, and what else? That's about it. And now you have to pick the hotkey. Okay, so I like to use the Alt and Control a lot, and then the numbers. So Control 1 or Alt 1. I'm sorry, that's the name. So we want to type buy at ask plus 3 cents, or buy ask plus 3 cents. That's just a name. You don't need to even name it. But the hotkey, I like to use the Alt or Control button and the numbers 1 through 9. Alt and 1, and then Control. So actually, Control is Control and 1 for buying. Control and Alt and 1 is for shorting. But that's how you build a hotkey. So that's for buy. For short, you just pick short, and then instead of the ask, you go to the bid, and then you can also, if you want to give it more, you want to give it a little bit of room for slippage, right, to make sure you get filled, you can add more. So that's at the bid minus 3 cents. Does that make sense? Instead of Control 1, now you can go Alt and 1. What I like about the control and the numbers is that you can't accidentally trigger an order. You have to use both hands to execute a trade. You can't, like, if you fall asleep, you're not gonna on the keyboard, you're not gonna execute a trade. So does that make sense? So that's why I like the Alt and Control plus one of the keys on the numpad. Okay, so that's for shorting. For exiting, So okay, can we do bid minus 3? Bid plus 3? That's not something that's not something I would do. Why would you do bid plus 3? Are you buying or selling or shorting? Okay, bid minus 3. I don't know if you can or can't. On the eTrade Pro platform you can't, so I can only go with the bid. So I shorted the bid. Okay? But again, Sterling is is a really good platform. It just doesn't have good charts, but it's a really good platform. So you can go bid minus 3, or as many as you want. If you tend to trade the spready stocks like Amazon, Google, Tesla, then you might want to pick. You might want to create a hotkey for shorting at the bid minus 10 cents, 15 cents to make sure you get filled. Okay. So I have a hotkey for shorting, a hotkey for playing long. Okay, for buying, for shorting. Shorting is the same as selling, so you don't have to create a separate hotkeys for that. And then a hotkey for exiting, closing the position. Closing, where is the close position? Let's see. Close position. You see it right there. And it's the escape button. So if I hit the escape button, it closes the position. Whether I'm long, short, doesn't matter. It just closes out of the position. And then I also have a hotkey for close half. This way, if I just want to get out of half, not the entire position. So those are the 4 primary hotkeys. One for buying, one for shorting or selling, right? One for closing the position, and one for closing half. Now, I just updated Sterling today because it was crashing. So this is new. They didn't have a close 3/4, a close 1/4. In the old version that I had, I didn't even have these as choices. See this? Close 1/4, close 3/4. Now, I don't think I would use them, but I would stick with just close the position or close half the position. With those 4 hotkeys, you can, those are the primary hotkeys for me. Now, again, if I don't want to get filled below the bid, if I'm shorting a $1 stock, I don't want to get any slippage, then I would create a hotkey to short at the bid, not below the bid, at the bid. Does that make sense? Or if you only want to get filled at the offer, then don't add any pennies to it, right? eTrade Pro platform, which is my main platform, it allows me to buy at the ask or above the ask, like so, but it doesn't allow me to short below the bid. So it's funny, So I can short only at the bid, or I can, using a hotkey, or I can submit a market order or a limit order without using a hotkey, but that takes time. So usually don't have as much time for that at the open. Yes, the escape would close. No, the escape. So you can actually decide how you want to do it. So close position, you can close it at the market. So take a look. Where's market? Market. You can close at the ask, right? At the bid, but I always have at the market. Okay. Or better yet, here's another feature. Check it out. Close position and pick default. You know what that does? So what that does is it allows you to pick what the default price is. The default price for me is 10 cents above ask, 10 cents below the bid. Does that make sense? And so this way it closes the position. If I'm long, it closes at the bid minus 10 cents. So it sends a limit order, or close the position at the ask plus 10 cents. Does that make sense what I'm saying? So this way you avoid actually having to use a market order. Okay? So you can dig deeper into this and, read the manual and figure out really how to set up your orders correctly. Now, people are lazy. They don't do that stuff. And to me, it baffles me, because this is how you're supposed to make a living, right? Unless you're using it just as a game, you're just having fun as a hobby. But to me, this is like super important. So So I read the manual, you know, for sterling. I went through the manual for eTrade Pro. Because not because I enjoyed doing that, but because it's important to know what the functionality is and set it up right. Okay. Let's see. So what's the advantage of exiting at the ask plus 10 cents or below the bid if you're long and you want to sell minus? The advantage is you're not using a market order. Use a market order, you know, you're telling the market, fill me at any price you want. Of course, they're supposed to follow the law and fill you at the NBBO, National Best Bid, Best Offer. But they don't always do that. So that's the advantage of, you know, using a limit order versus a market order, okay? So you can do a market short order at eTrade. No, I think you can. I believe you can, but not on all stocks. I don't know why, what the issue is, but I don't have a hotkey to short at the market ever. I mean, I don't ever enter at the market with a market order, always with a limit order. And if I don't get filled, then I live with the. Then I'm fine with that. Can you use hotkeys using a Power eTrade? I don't think so with Power eTrade. I don't think so. Let's see. Do you have a hotkey for shorting SSR stocks? Yes, at the bid. Just short at the bid. Okay? That's it. I don't have anything special. Just at the bid. So there's a lot of questions. I want to see if I can address them all. So TG, the escape, we talked about it. Let me see what my escape does. So here it is. This is my real escape. Default. See, it's not even a market order. That's my default. That's my close position. See it? It's actually a default. So, okay. Let's see. In pre-market, since you only trade with limit orders, can you slam the bid? No, you can't. Hotkeys don't work for pre-market. I don't think they do. I mean, maybe we can program them to work in the pre-market and post-market. I'll take a look and see, but I doubt it. So no. Time and force extended. Yeah, you can create hotkeys for pre-market, post-market. Yeah, see the time and force extended hours. So you could, I guess, create hotkeys for pre and post market. You could. I don't trade the pre and post market, so I don't have any hotkeys for those set up for those. Okay. Let's see questions. I'm gonna try to catch up, but there's a lot of questions. Let's see. So those hotkeys are for when price is close to your entry price. For example, if the stock is $1 away from your entry, you just would type in the stop limit. 100% correct. This is when you're trying to get into something, it's about to break down. You don't have the time to key it in. You don't have the time to go like this. To go like this. CCL short at, let's just say 1649, 1,000 shares. Stop limit with a limit at 1645. The stock is gone by that time. See how long it took me? And I did it pretty quickly. Short here, limit there, quantity. You don't have the time. Pick the right order type. By that time it's gone. So that's what hotkeys are for. Okay, is that with the press of a key, 2 key combinations, it sends an order right away with just one press, one button. Okay, so you have to trade. See, this is a new thing. I didn't used to be able to. Now when I drag the main menu, this is a Sterling main menu. It moves everything with it. It's weird. Is that a new feature? Look at this. Might be a new feature in the new Sterling. My default is like 1 share. Here's my default, 1 share. I don't want to make any mistakes, so for the default quantity, I just have it as 1 share. All right, let's see. Could you please explain what a climactic Schwab question? Does Schwab allow you to short like at the bid or the ask? Yes, I already set up the. I've never traded on Street Smart Edge, but I did download it. I did open an account. I did download it and I set it up exactly like E-Trade. You can definitely set up hotkeys to short at the bid, buy the ask for sure. It took me 3 seconds to figure it out, so it's really simple. But I don't want to open Street Smart Edge right now. Let's see. Can you say a few words about how I put together the watch list in the pre-market? Yes. I have a scanner similar. It's a custom built scanner, but it's similar to this scanner. It's similar to TradeIdeas.com, and with a pre-built gap scan for it. Okay, so I download the list, I go over it, I get rid of anything that I don't like at all, but you have to pay money to get that to get the scanner. My scanner is custom built for the pristine method, but it's not available to the public. But it's the same as, it's similar, very similar. It's almost identical to ScanZ, but I prefer, if I were to recommend a scanner, I would go with Trade Ideas, trade-ideas.com, and they have a gap scan built in. So you download the list, go over it, make sure you understand, you know how to read gaps, and based on that, then I figure out what I want to keep, what I want to get rid of, and then I create my favorites list, my hot list. Okay, so that's how I do it. Now GB in the room and James, they use their platforms. GB uses TradeStation, I think James uses Thinkorswim, and they put out their gaps list. So I look at their list also to see if I missed anything, and then I add it to my list as well. So that's what I do personally. Okay, all right, let's see. There's a lot of other websites that are free that gives you, like Market Chameleon. So if you go to Market Chameleon, and you go to pre-market trading, it'll give you a gaps list also, but it's not complete. So if you scroll down to the bottom over here, so it gives you the most active, top gainers, top decliners. And if you do it in the pre-market, that's your gaps list, but it doesn't give you the complete list. Okay, there's a lot of websites. Finviz, I'm sure, also has a gap scan. I mean, Zacks, probably Zacks.com. Briefing.com, I'm sure, has another gap scan in it. The heat map, the NASDAQ heat map has a, you can look at it in the morning. Okay, I can just type, we can just Google it, heat map live. So that should give you some gaps, but the best way is to be part of this room, okay? Because I do the work for you, and you just download it. You just go to that room drive and download the list in Excel, okay? Or you copy it from the alerts window, okay? All right, moving on to the next question. Let's see. Do I ever buy or short in the pre-market? I don't. I mean, extremely rare that I have to use the pre-market to get in or out of a position. Extremely rare. Let's see. Do you risk the same amount of dollar amount per setup? Yes, in theory. Sometimes I can't get filled, or sometimes I accidentally oversize it, or because I'm moving quickly. Then yes, but in theory, yes, I try to risk approximately the same amount per trade, which is about $500. Okay, let's see. Oh, good precision, thank you. So you're saying so here it is. So if I press Control, okay, I see. Great, good to know. If I press Control, it doesn't move everything else with it. If I don't, then it moves everything. Okay, good to know. Great. That's a new feature in Sterling. that wasn't the case in the old Sterling. Okay, good to know. Let's see. Okay, so I appreciate you saying that. How can a guy make a couple hours or even 1 hour per day? Well, you can make a lot more if you know what you're doing, or if you're, hopefully part of the right trading room. I'm an example of that, and there's nothing special about me or what I do, and this is just one of the accounts that I trade. It's not my entire trading. And as you can see, for the year, it's coming up live. For the year, I'm up over $700,000, and I'm not doing this to show off, but see, it's $716,000. This is only since March. I only opened the account in March. Okay. So how can you make 1 or 2 hours a day? Well, it's completely possible. I do it every single day, almost. And there's nothing special. You just have to know what you're doing, right? And then the other thing is, you have to have the patience and the discipline to do what you're supposed to do, and let go of everything else. You see it in the morning. When I'm on the mic in the morning, I have 600 people in the room in the morning, okay? Right now there's 400 people logged in. But in the morning, there's 600 people. You think they're not all itching for me to call a trade? Of course. But I try to keep my composure. I try to be patient and wait for the right setup. And today it took me like 30 minutes to find the first trade. And right after that, another trade. So again, it's totally doable. It's, and that's why I'm showing you, because it's totally doable. But you do need, you can't just, it's not a walk in the park. You have to kind of know what you're doing and have the discipline and the patience also. So it's partly technical analysis, partly psychology, and partly really taking it seriously. Because a lot of the questions that I see, that I get, they're really simple. If you just Google something, Google them, you would actually find the answers. But people are, they're just taking it as a hobby, and you know what? If you don't give it if you try to shortcut it, it will shortcut you. It wouldn't work. Okay. All right. What's the biggest tip you can give to a beginning trader? There's so many of them, Mike, that it's hard to give you just one. There's so many, but. One of the most important things that I learned is to use what I call the PAIR strategy. PEAR: plan, execute, analyze, and so PAR. And what does the R stand for? Refine. Thank you. Refine. Yeah, so here's what it is. So you first figure out what you want to do, right? So come up with a trading plan, basically. Let's say it's this pattern. A chair missing a leg right here. See it? It's a chair missing it. It's a breakout play. Let's say you want to scan for a play, the stock that's basing at the highs. And then you want to buy it above once it breaks out with a stop under the base. Okay? Let's say that was your play. Or let's say your play was, I don't know, a buy setup like we had on the Lilly today. When you have a multi-bar pullback on a stock that's in an uptrend and then takes out the prior high. Like so. Okay? That's another pattern. Or let's say the pattern that you want is called a 1, 2, 3. You get the initial igniting bar, the doji bar, and then the continuation bar. Those, I just gave you 3 patterns, by the way. 3 patterns, okay, that I do personally. Breakouts, pullbacks, and 1, 2, 3 patterns. Those are excellent patterns. So make sure you write the pattern down in your trading plan in detail. Describe everything about it in detail. Then figure out where you're going to enter, where you're going to put your stop, how you're going to enter. Is it going to be a limit order, market order, and then figure out what the target is for it, how you're going to manage it between the entry and the target. What happens if it goes against you? What happens if it goes in your favor? Figure all of that out, okay? And I've done a whole lecture on how to write a trading plan. So figure that out. That's the first step. Figure out your trading plan. The second step is don't trade aimlessly every day. Once you have your trading plan, agree to take 10 trades. Put on, a batch of trades. 10 trades, 20 trades, and then at the end of the week, or once that sample is complete, you have to evaluate. So the first is P for plan. Then go out there and execute your trading plan. Try to be as strict as possible. Okay. Then look at the results of every trade that you took. Analyze it. See what worked, what didn't work. Right. Make the necessary adjustments. Refine the R, and then to your trading plan. You're making adjustments to your trading plan. You realize, well, this pattern that I do, it doesn't work if I take it at lunch, or it only works in the morning. Then you need to revise your trading plan so that you only trade this pattern, which is called a 1, 2, 3, in the morning. Maybe this pattern in the afternoon. Does that make sense? So make the changes to your trading plan, and then put on another set of trades, another 10, 20 trades. The more active you are, the larger the batch has to be, the larger the sample has to be. The less active you are, the smaller it can be. Does that make sense? So that's one of the most important things that I tell people to do in the beginning. But it's hard because it means you have now to approach it in a very methodical, disciplined manner. And people are not disciplined. I mean, they just are not. Especially when we get emotional, we lose the discipline and we lose the patience. So we start trading randomly, right? The good thing is being disciplined, being patient is not a talent. It's a skill, or it's basically it's a habit. It's basically something that you learn. And once you get into the habit of being patient and disciplined, it's a reinforcing thing. It's a self-reinforcing habit, basically. And the more you do it, the easier it becomes. Okay? So that's my suggestion, is to follow the pair strategy if you're new. But in order to follow the pair strategy, you need to also have at least some kind of education, some kind of knowledge as to what you're going to do to write your trading plan. Does that make sense? You have to have some kind of knowledge. If you don't have any knowledge and you expect to make it in trading, then you're delusional. And I don't care who you are. I don't care how smart you are. You're completely delusional. You're not going to make it unless you just gamble. You just say, okay, I'm going to buy $1 million worth of Apple today, and let's see what happens next week. Okay, sure. Maybe you'll be lucky. You might get lucky, and Apple might go way up next week. But if you try to do it on a daily basis, on a continuous basis, where you trade like actively every day or every week, then you're not going to get lucky forever. You'll get lucky once, twice, 3 times, 4 times, but it will. And if you're doing it randomly, then you'll get random results. It will not work for sure. Okay, so that's the thing about trading. We do. It is simple, but it's not easy. There are steps that are required. Okay. All right. Let's see. Okay. The WT. So, a question: you showed your trades today, but they weren't all listed in the alerts. The WTRH and the GSKY both live on the mic. Okay. so that's the thing. And then my platform crashed, and I had to scramble to like figure out to restart my machine and come back on get back into my platform so I can manage my position. But the GSKY, I just, it was just a mention on the live on the mic, that 1 penny base. Okay, so that's why it didn't make it to the alert window. Okay, let's see. Can I elaborate on the pullback pattern? Okay, just I'll spend a minute on the pullback pattern. So a pullback, when we're looking at a pullback, we are looking for either strong stocks to play long when they pull back to support. So a pullback needs, an uptrend, so a stock that has higher highs and higher lows, like so. And then when it pulls back, we need to have 3 or more red bars. 1, 2, 3, could be more, could be 4, could be 5. And then we also need the stock to take out the prior bar's high. That would constitute a trigger. If it does, then you have a pullback. Now, in terms of the pullback, it needs to be at the rising 20 period moving average. It needs to be at support. What was resistance in an uptrend becomes support. It needs to only pull back about 50% of the most recent move up. It can't pull back too much. Does that make sense? So it has to be at the 20 at support, and we don't want it to pull back too much. And you gotta have 3 or more red bars, and you gotta have an uptrend. Okay? And then if you get 2 green bars in your favor, you can start going bar by bar. And then when it gets close to the target, the prior high is the target, you can just take it or get really tight by going, looking at level 2 or exiting as soon as the bid drops, or you can go 1 minute bar by bar. And now this is just a simple way to describe the pullback pattern, which is this. Here's the lily, was a pullback pattern. I didn't like it enough to do, but it worked. There it is. That's a pullback, deep pullback to the rising 20 and to support, but it was pretty deep. Deep means, again, retraced. So from here to here, that's 100%. Down to here, that's 80%. Retraced a good amount, but worked somewhat. We ran out of time basically. That was the end of the day. I didn't actually do it, but worked. That's a pullback pattern. But sometimes the pullback patterns don't look just like this. Sometimes they look like this. See it? It's a pullback with a rounding top. Okay, now if this was a slightly better rounding top forms when you have a breakout failure in the middle. That's how a rounding top forms. So every rounding top has a bit of a breakout failure in it. This was just a minor breakout failure, so it wasn't that good. So I passed on the first entry, and then I waited for the 1, 2, 3, which formed a 3-cent stop or so. Sometimes they look like this, right? You have a stock that gapped and ran up. That's a sell setup under the prior bar's low. Once it takes it out, that's the trigger, short. Okay? So there are various, not every pullback, not all pullbacks are created equal. There are pullbacks that look like this, which are known as W patterns or double bottom, or some pullbacks you get the initial pullback and then a higher low. Does that make sense? Now the opposite is true also for shorts. So there's like 10 variations on the pullback play. They don't always look like what I described initially, which is just an up move, a pullback, and then back up like this. So they don't always look like this, like the lily, right? They don't always look like this. Most of the time you have to kind of wait for the pattern to really complete and not take the first entry most of the time. Okay, so that's kind of a quick and easy way to describe the pullback pattern. All right, what time frame are you using on the pullback? So in the morning I start the day off on the 1 minute. So from 9:30 to 10 o'clock I'm on the 1 minute. From 10 o'clock to 10:30 I'm on the 2-minute time frame. From 10:30 to 11:30 or so, I'm on the 5-minute, and then from 11:30 to 4 o'clock till close, I'm on the 15-minute. Those are the time frames that I use throughout the day, and the reason for that is simple, which is you condense the data. In the morning, things are moving really fast, so you have to go use the 1 or the 2-minute time frame. But in the afternoon, if you stay with the 1 or 2-minute chart, you're not going to be able to tell what the, like, here's the cues on the 1 or the 2, on the 1 minute. Can you tell what it's doing? You can't. You can't. But if you look at the 15, now you know what's happening with the this is the market with the cues. Now you see the bigger picture. So initially on the 1 minute for the first 30 bars or so, 30 minutes, then again at 10:30 I go to 2 minute. No, at 10 o'clock I go to 2 minute. Then at 10:30 I go to 5 minute. Okay. Do you look at for time frame continuity in your trading patterns? I think the question is, do you look for multiple time frame alignment? And that is correct. Yes, I do. Sometimes something might look good on one time frame but might look really bad on another time frame. So my suggestion is to set up your platform so that you have the charts next to each other. I mean the time frames. What I mean is, let me see if I can project it. Give me 1 second. So I'll try. Okay, just give me 1 second, please. 1 second. Okay. All right. Let's see. So I want to show you how to set it up. So here, I'll just show you. It should come up in just a second here. Let me open it up. So now what I'm showing you are just 3 time frames. So this is the 1 minute, it's just hidden. 2 minute, 5 minute. See it? And then right next to this chart, I have the 15 minute. Right next to the 15 minute I have the hourly. Next to the hourly I have the daily. Does that make sense? Right below that chart I have the market chart. 5 minute also. Right below that I have the 2 minute. See it? And so this way you can quickly, you see our eyes are, what shape are they? The human eye. It's oval shape. So it's easy to go left to right or right to left when you're scanning. So I see people put the 2 minute and then the 5 minute below it and then the 1 minute right here. It's hard to analyze it like this. It's better to have them all on the same line at the same level, and then right below or right above put the chart of the market chart. This way you can tell whether the stock has good timing with the market, whether it has good relative strength or relative weakness. Does that make sense? So, and I have 6 time frames, so 1 minute, 2 minute, 5, 15, hourly, daily, and I have the weekly and I have the monthly. But the monthly and the weekly, you don't really need them for day trading. It's just that I also swing trade. So I have them on the same line like this on top of each other. And so when I type a symbol, it updates the top chart. So Apple, bam. They're all linked to the level 2. Okay, there you go. Microsoft, it updates all the charts. The 1 minute, 2, I don't know why it's taking so long, because I'm projecting a larger area probably. 1 minute, 2 minute, 5 minute, 15 hours. Does that make sense? And when you're trading during the day, don't be stuck looking at the 1 minute. Okay? So what's directly in front of me is the daily chart. The daily and the hourly is where that's the first thing that I see. I look at the daily. And then here's how big my daily chart is, just so you see it. See it? That's my daily chart. It's pretty big. Why? Because my trades come off the larger time frames. So I don't want to trade just everything that's moving. I want to trade the things that based on the daily chart, I can tell there's a larger move, that the stock is making. There's a larger move underway, and and then I go to the smaller time frames as a way to get into that larger move. Does that make sense? So I start off by analyzing the daily chart, and then I look at the smaller time frames. But what I see all the time is people, the first thing they look at, the first time frame they look is the 1 minute or the 2 minute. And then they wonder why they end up trading things that don't move or that don't look good. So again, I recommend having a top-down approach to trading. Look at the larger time frames. If the stock doesn't look good on the daily, then I wouldn't even bother looking at the intraday time frames. If the stock looks really good on the daily, then you can look at the smaller time frames. Okay? Let's see. Hey JC, for the charts, what are the various lines? The 8, the 20, and the 200 simple moving averages. Again, 8, 20, and 200. When entering on a pullback, the best entry would be the break of the previous bar's high with a stop below the low, or would it be better to let the bar fully close? No, you don't want to let it fully close, because sometimes, like which one were we looking at? The Lily, but the Lily on the 15. So here's the 15-minute chart. Here it is. So if you wait for it to close, look at this. Now you're going to get it, instead of at 146.92, now you're going to get it at 147.32. That's the close, right? That means you're going to get in 40 cents late, exactly. So no, you cannot wait for it to close. You cannot wait for it to close. Okay? The entry triggers as soon as the prior bar's high is taken out. Now, hopefully, it won't do this. Hopefully it wouldn't trigger you in, and then before the bar completes, it reverses. Hopefully that doesn't end up happening, but that's why you pick the good ones. You only play things that you feel sure about. But sometimes what happens is, it triggers and then reverses. So you have to be careful. It doesn't happen all the time unless you're picking the bad stuff. It does not happen all the time at all. I can't even think of the last time that it happened to me, where I got in and then the entry bar immediately got clobbered, like immediately reversed. It only happens if you don't know what you're doing. I'm sorry to say, but it's true. You're focusing on swing trades. Do you have a strategic swing trader product? Yes, just email info and they'll send you the link at t3live.com. Okay, info@t3live.com. Let's see. Do you use candle patterns, doji, hammer, inside bars? Okay, so let's talk about that for a second. First, when I started trading, when I started learning about candlesticks, I read that book by Steve Nyson, I think is his name, or Neeson or something, about candlesticks. And boy, it blew my mind away. I thought it was a $90 book, by the way. It was a $90 book. I bought it for $90. It was $120 on Amazon, and I bought it for $90, and I thought I was getting a deal. And I thought, oh my God, this bar, I know now what it means, the stop and tail. This bar means it's going to drop. This bar means the stock is going to go higher. So that's what unfortunately, I'm not trying to badmouth the guy. This is what the book teaches you. It teaches you to analyze. It teaches you how to analyze candlesticks bar by bar, which is good to know, but it doesn't teach you how to put the whole picture together. So what's most important is not knowing, oh, this is a hammer or this is a doji bar. Who cares? What's most important is knowing how to read the chart in general. And then you can go and say, well, I really like this reversal right here. This is the piercing pattern, whatever you want to call it. I don't care what the name is. This is the piercing pattern and it is really bullish. So if I get a pullback here, I'm definitely going to buy it. Okay, fine. But yes, context is everything. You have to be able to analyze the big picture first, and then you can go and look at the candles. So I don't look at the detail before I analyze the big picture first. Okay? And then, yes, and there are certain patterns, certain bars that I like a lot. Like, for example, one of my favorite bars is the narrow body bar. A narrow body bar is a bar that that's not like this. This is a doji bar. This is a narrow range bar. A narrow body bar is a bar that has tails on either side, like this one, but is not, the bar itself is not narrow. It's average sized. Okay? And when it happens on a, like let's say we get a rally and a sell setup, or a pullback, so you get a pullback like this, and then you get that big cross. Basically it's a big cross. Oh boy, that's my favorite reversal bar of all time. Now, do I like the big bottoming tail or the big topping tail? Absolutely. But those, the problem with those is, you know, you have a big stop. So let's say you wanted to short right here. Look how large your stop would have been. Huge. So which means you know, you have to size it correctly. With the larger the stop, the smaller the shares. Does that make sense? So there are certain bars that I like for sure. There are certain, but the most important thing is being able to analyze the trend, the entire chart first. Then you can look at the detail. Okay? A lot of people, you know, look at the detail before they analyze the bigger picture. I don't use the VWAP or VWAP, whatever it's called. I do not use it. In pre-market, you were looking at charts saying there were certain entry points. Looking at the watch list, I'm thinking the values shown were in percentage. Where you're just calculating the open. Yes, it was just the difference between the open and yesterday's closing. Okay. What's your criteria to eliminate a stock? So the first thing is, every stock should be eliminated unless, let's turn this off. Every stock you should not be considering anything unless there is a pattern. Unless there is a pattern that you know and recognize and that you love. Otherwise, just get rid of it. You don't want to be analyzing everything. I don't stop and look at everything unless it jumps out at me. Like, let's say this one is on my charts. I would never even think twice should I short this? Should I buy it? There's nothing. It's just going sideways. So the first step is to know what you're looking for, to know what you're seeking. If you don't know what you're looking for, you're going to have a hard time in knowing which ones to keep, which ones to get rid of. That's the first thing. The second thing is, if it's a sloppy chart, like, you know, if it's a Christmas tree chart, you get red, green, red, green, red, you know, red, green, red, green. That's no follow through. What I want is something that has momentum, that has energy, and that has multiple green bars in a row. Multiple, if I'm bullish, multiple red bars in a row. If I'm bearish, see it, you know, multiple red bars in a row. Okay, it paused here, multiple red bars right there. So that's what I look for. Things that have continuity, good follow through, good momentum, but not something like this, you know, red green. That's not going anywhere. Ultimately, if I'm bullish, if the stock is bullish, so for bullish stocks, let me rephrase. For bullish stocks, you want the stock to be, you want to have a 20 period moving average that's coming from the bottom left corner of the chart to the upper right corner of the chart. Okay, like so, from the bottom left to the upper right. So that's the first thing. Then you want the stock to be trading above the 20. Okay, with, like I said, with momentum, multiple red bars, multiple green bars at a time. You want the stock to have a catalyst, some kind of an event, like a daily gap that is driving the stock higher. Okay, that's moving, making the stock move. You want the stock to have good reward to risk. If you're playing, you know, if you decide to play it, you want to make sure it has good reward to risk. And you want to make sure that it's a clean stock. Like, what that means is the bars, every bar is open is in the prior bars, in the area of the prior bars closed, like so. They don't overlap, they don't gap into each other. It's not like, you see what I mean? That's bad. You want the bars to open and close, like, you know, we were looking at the CHMI. You know, notice how, well, this one, you know, they're overlapping a little bit. You don't want them to be overlapping. See how that's not overlapping? That's beautiful. When they start to overlap, it's tough. It becomes much more difficult. Look at this. We were looking at it just a minute ago. INO. Look at this. They're not overlapping much. I mean, there's some tails here. They're not overlapping, okay? But if you look at something like ADAP, we're looking at it. Every bar overlaps. I mean, they're overlapping. So you don't want that. And if the stock, again, if we want a rising 20, we want price to be above it. We want the 20 and price to be above the 200 period moving average. Okay, and we want a stock to have momentum. We want it to have room to the upside. We want it to have a catalyst, some kind of an event that's driving the price higher. Okay, so those are some things to keep in mind. There's a lot more, of course, but that's just what comes to mind, right now. Okay, let's see. I know I'm not catching all the questions, and I apologize, but what can I say? There's a lot of questions. Do I use the pre-market data? I don't. Not for the moving averages, and I don't even look at pre-market. You showed the Qs chart below the stock. Do you look at the SPY or the diamonds? No, just the Qs. I do have the SPY and the diamonds. I mean, I do have a list of them on a watch list. So I'll show you what I mean. So here's this. So you see how I have the Qs, the SPY, the IWM, the semis, semiconductors industry, the XLF, Apple, Tesla, and then I have USO, I have gold, I have real estate, because I'm always worried about my house, my place crashing, so I'm constantly looking at real estate. I have China, and this one I just added yesterday because this is actually HTZ. Remember HTZ on my PNL? HTZ is my number one stock, was my number one stock in 2020. That's HTZ, 48K. But it doesn't trade anymore. So just a couple of days ago I discovered that HTZ, because it got delisted, is now HTZ GQ. So I just need, so I put it on the list here, but that's usually my list here. So I do have the Qs, I do have the SPY, I have the IWM, I have the diamonds is useless. It just represents 30 companies. You don't really need it. So I do have these two over here, but I don't have them on charts. The only thing I have on charts is the Qs. Okay? JC, your questions are very, very long, so it takes me a while to read them. Let's see. Could you just trade one stock? And so a question, could you only trade one stock? And which one would it be? No, I couldn't. The answer is no, because that would be torture to me. I don't want to just trade one stock. I want to trade what looks good, and not trade the same stock whether it looks good or bad every day. I'm not a market maker. Okay, I'm looking for patterns. Some stocks don't give you a really good pattern for 30 days in a row. Might not give you a really good pattern. So I would not do that personally. I don't even know if I could make money, honestly, just trading this one stock, the same stock every day. Okay. Do I care about shares float? What do you think? Do I care about shares float? No, I don't. Do you pay much attention to whether a stock is thickly traded? Never heard of that. And no, I do. I want to make sure the stock is liquid. But the thing is, when they gap, like, we traded the WTR. This was the biggest winner today for me, right? How much volume does it normally do? I don't know. I mean, other than today and yesterday, let's see. Well, it does, let's say, about 1.5 million. That trades a good amount. But look at today. It did 7.5. So the day they gap, they end up doing a lot more volume. Like, how about, I don't know, INO. Look at the volume on the day of the gap. Look at the volume last couple of days. Normally, very liquid, but today it did, is that 350 million? Or, let me just check. It's too small. 35 million. So my point is, like, how about GSKY? I bet you this is a thinly traded stock. It averages, let's see, other than last few days, it averages about, I mean, some days it does 200,000 shares. But today, it did 3.5 million shares. So if you trade stocks, even if they're thinly traded, If you only trade them on days that are interesting, that have a gap, that have this reported earnings, I had it as an earnings play short. So that's how I found it, by the way. This was in my swing account. That's how I found this trade today. So if you focus on if you only trade these stocks that are supposedly thinly traded, normally thinly traded on the day of the gap, then you should be fine. But let's see. Do I have something on my charts that I wouldn't trade because it's too illiquid? I don't know. I mean, this looks pretty thin. Is it? It looks pretty sloppy. I don't know if it's thin. Sometimes, you know, they are too thin, but the truth is, when they gap, you get a lot of volume and there's a lot of liquidity. Okay. Why do you typically only play pro gaps as opposed to novice gaps? Because 90% of all gaps are pro. 90% of all gaps are pro. In fact, sometimes, you know, a whole week goes by and I can't find a single novice gap. So that's why. But if there's a really good novice gap, I will, you know, I'll trade it, no problem. But yeah, the majority of the gaps are pro, so that's why. Let's see. Okay, what help you to figure out if a stock will gap versus, like, continue in the direction of the gap versus fill? You have to be able to analyze the gap. So SK, you have to be able to analyze the gap, and there is a method for analyzing gaps. I teach a whole class, an all-day class, 8-hour class, on how to read and analyze and trade gaps, called Advanced Gaps Strategies. Okay, so that's how I do it. Safeo, do you have a time for a question? I'm sorry, repost it, please. Yes, repost it. I do look at the bid and the ask spread, for sure. I do look at the bid and the ask spread, for sure. If it's spready, even if it's liquid, I will not do it. This is why Beyond, remember this morning? How much did I hesitate on? I mean, it didn't hesitate for that long, but I wanted to do it, but I know the stock is wild, jumpy, spready. Then I just stay away from it. How much volume does it do? It does millions every day. I mean, today it did 30 million shares. Today, 29.5. So it does a lot of volume, but it's really jumpy and spready. So I stay away from these. I would rather trade something that averages 500,000 shares, like GSKY, but is not spready or jumpy. Does that make sense? It's called Advanced Gap Strategies. Advanced Gap Strategies. AGS. Okay, let me read Safeo's question. I think I'm going to be teaching it in January, to tell you the truth, but there's a recorded home study that you can take already right now. So I recorded the last time I did it, so you can watch the recording. But I think the next live class is going to be in January, I think. Okay, let me just read Safeo's question here real quick. If swing trading a particular stock, and at any given moment you see that the stock is overbought, you are long, or oversold, you're short, do you allow yourself to exit the position and re-enter as the stock goes back to the MA according to the time frame you are playing? In a few words, to play intraday the stock that you are trading as a swing play. Okay, so the question is, you're in a stock like this one. I'm in the CYH. Okay, I mean, don't tell me this is not extended. It's super extended. Do you get out of it and re-enter on a pullback? Isn't that kind of what the gist of the question is, Safeo? Is that what you're asking, just to be sure? Yes. The answer is you can. But the problem is it's extremely hard to get back in it once you're out. I took half 2 days ago. Yesterday? No, the day before. At almost $10, $9.90 I think. Okay. But will I ever get back into the half that I took? Let's say it comes back down. Will I ever get back in it? It's extremely unlikely. So it's best not to mess with the play and to just play the swing trade as a swing trade and the day trade as a day trade. Don't mix them. Don't mix the two. Remember in the book Reminiscences of a Stock Operator. He talked about a guy, a really good trader named Turkey. In the book, they nicknamed him Turkey. And a guy in that brokerage house gave him a tip about a stock, and the stock went up a lot, and he was up, I think, $7,000, which back in the day, 100 years ago almost, that's a lot of money. So the guy that gave Turkey the tip, he told him, get out now and you will enter and look to enter on a pullback when the stock corrects. He said, no, sir, I am really grateful for your tip, but my experience tells me, and I paid a lot of money for my experience, I don't wish to throw it away. My experience tells me if I get out, I will not get back in, basically. So no, I'm going to stick with it. And if it corrects, that's fine too. So that, something like this. So that's the reason, is that it's very hard to get back in. I mean, every time I get out, I almost never get back in. So it's best to really be careful about your exits. Very, very careful. Tomorrow is a bank holiday. Are there any changes in the strategy? No, sir. No changes. Okay. Let's see. What else? I'm sure I missed a lot of questions. So let me know. Feel free to just copy and paste. Reposting. No problem. Yeah, no problem, TraderVic. You had mentioned that you risk not more than 500 per position. Correct. How is that you have much profit? Because I look for tight stops and then multiple reward to risk. Multiple R's per play. So for example, the WTRH, which was the biggest play today. Let me show you the two plays that I took on it. This was the first one, under 80 by 82, I think. Oh, 84. See how tight the stop is? 4 cents. So every 4 cents is an R. Every 4 cents is an R, okay? It wasn't, I thought it was even tighter than 4 cents. Oh, I'm sorry. It was under 81. Yeah, under 81, I guess, by 84. So it's about 4 cents. So every 4 cents is an R. 15 minutes later in the afternoon. See this? That was my entry. Under 6, I got it at 69 actually. 69 by 72, 3 cents. So every 3 cents is an R. That's an R. That's another R. Does that make sense? So a couple R's here, and then at the end of the day, it made 2,000 bucks. But here's another thing that I look to do. If I'm in a play, not this one, but if I'm in a play that keeps, look, somebody's saying gutsy. It's not. You know why? If it's gutsy, it means it's like luck. It's like, this ain't luck since March. This ain't luck. And that's what I do. That's my style. It's a style. It's a way to trade. This is why I stayed away from the Lily. Because the Lily has a big stop. So when you play the big stops, they're more secure. For sure. It's more secure. It's unlikely, it's a lot less likely that this whole bar would get taken out. $1.92 versus 3 cents. But you know what? If it works, how much are you going to make? Half an R? A quarter R? You're not going to make much. So that's the thing, okay? I was just going to say that, and if I'm in a play that keeps going, then I do look to add to it. Okay? Then I do look to add to it on the way up. So sometimes I will initially risk the 500 bucks. Let's say here, long, stop right here. I will initially risk the 500 bucks. And then I see, another setup. I will add to it. So I remember trading the HTZ. Oh, it doesn't come up because it's no longer stock. And I started off with 5,000 shares, then 10, then 20. And before the end of the day, I had reached like 60,000 shares. Okay, how could you have 60,000 shares and be risking only 500 bucks? Because the stock kept moving in my favor. Does that make sense? So I kept pyramiding, so to speak, and adding to it. So for sure, if it went against me, I would have given back a lot of money. But I assure you, I would not have lost more than 500 bucks. So sometimes I do add as the stock goes in my favor, for sure. And I end up with a lot bigger size than I initially put on. And that's pyramiding. For somebody who's new to trading, I don't really recommend it. No, the HTZ and all these big positions here, that's not, I didn't trade it once. That's not today. That's year to date. Those are all the times that I traded it. I mean, they were like 100 times. MRO, the same thing when oil stocks were falling apart. TGE was oil. VXRT is VXRT, is vaccine. MTDR is oil. Okay, so the real estate. I don't know what HEBX is biotech. I think biotech. You know, so okay, all right. Next question. How do you calculate the R? Very simple. It's the difference between your entry and your stop price. So on Lily, the entry price was over this bar's high, 146.92. Stop is 146. The difference is 92 cents. So you can, so if you take out a calculator, we don't want to do that, but I'll show you. $500 divided by 92 cents tells you how many shares to buy. 543. Does that make sense? So it's the difference between your entry price and your stop price. But of course, better and much easier than having to calculate it like this is to have a table. Hold on just 1 second. Why is not coming up? 1 sec. To have a table like this one right here. I'm opening it up. Here it is. That tells you how many shares to buy based on the size of stop. So these are in pennies. So 5 cents, 10,000 shares. 6 cents, 8,300 shares. 90 cents, 500 shares. 100 cents or $1, 500 shares. Does that make sense? So come up with a table like this, print it, tape it to your screen, or put it on your desk, tape it to your desktop, and this way, you know, you can do the math quickly. You say, okay, this is 92 cents, and you look over here, and you see between 90, well, in this case it's 500, but let's say 25 cents stop. Okay, 25 cents it falls in this range between 22 to 28, 1,700 shares. Does that make sense? And then let's say tomorrow you want to lower your risk, the table updates. Does that make sense? $100, there you go. $1,000, there you go. Okay, but I don't ever start off trading, you know, like a position with 20,000 shares. I don't ever do that. I buy 5,000 maybe initially, and if I see that okay, it's good, it's going in my favor, then I'll add another 5 or 10, whatever. Okay. Is this income achievable in 6 months of training? Is this $700,000 if achievable in 6 months of training? Maybe, maybe not. I don't want to say no because some people might be really good at it and they trade big size. It could be achievable, but it's unlikely. Okay. How do you decide to add to a position or take off profit? It depends on the chart. If it reaches, basically, if it moves away from the 20, then I'm gonna look to take. If it's hugging the 20, you know, like trading out, like INO was hugging the 8, then I don't want to take. But if it moves away from it, puts in a wide range bar, then I will not. I'll take it. I'll get out of it, or I'll get some out. Does that make sense? But as long as it's hugging the moving average, then I will try not to get out of it. Let's see. Can you elaborate on managing it? Trailing the winners. It's a big topic, so I'll have to do it some other time. But basically, just in general, when you start off managing, when you get into the play, this is a buy setup pattern, right? Start off by being loose with your management, like, hands off. Let the play, give it enough wiggle room until it gets going. Don't be tight with your management when you first get into the play. When the play gets close to the target, the prior high, when it gets close, then get really tight. Go 1 minute bar by bar, meaning as soon as it takes out the prior bar's low, get out. Or off the level 2, as soon as it breaks the bid, get out. In between, so somewhere here, be very tight. At the bottom, when you first get into the play, be very loose, very hands off. Okay? In between is when you you're gonna try your best not to mess it up, not to do anything, unless you get a pivot, you get multiple bars in a row, and you get a wide range bar, you get a spike in volume, you get a breakout failure, something, you have to kind of figure out what those events are that will allow you to get out of the play. But we know what to do when that play is close to the target, is be very tight with our management. We know what to do when we first get into the play, be loose, okay? In between, you look for topping signs. If you have a topping sign, then you get out. If you don't, then you stick with it. And if you get a pivot, then you can raise your stop. So that's kind of Management 101 in a nutshell. Of course, there's a lot more to it, but that's just a quick recap. Yes, I said hugging the 20-period moving average. Okay. When you started out, were you working for a prop firm to get leveraged, or did you open some margin account? There was no prop trading when I started. When I started, I just opened the TD Ameritrade account. I didn't know what shorting was when I started. It didn't make sense. What does that mean, short? You short something. So I didn't short anything for 6 months. So I opened the TD Ameritrade account. That was my first account. And then, I don't know, and then maybe E-Trade after that, and then, a bunch of different accounts with different retail brokers. So that's how I started off. Let's see. I believe you are using the Pristine method. Could you please give us a brief us on the difference between the Pristine method and different other styles of trading? Okay, the Pristine method basically is a way. It teaches you a way to objectively read charts, okay, and analyze price action objectively. Okay, so that's the first thing. The second thing is it teaches you to look for high probability repeating patterns that repeat. Why do they repeat? Because human nature doesn't change. So the same thing happens every day almost. Okay, either people panic out of stocks, or they buy because they're so greedy, or they are trapped in the stock. It's the same stuff every day almost. It's not identical, but similar. So the Pristine method, the first and foremost, is it teaches you a way to objectively read charts. Once you're able to do that, so we also teach you how to, we teach you the life cycle of a stock. What's the life cycle of a stock? From the day it's born till the way it dies, so to speak. So we teach you that, and we teach you the different stages of the stock, the stock cycle. So like a human being, initially they're baby, then toddler, then teenager, then adult, then old, whatever, elderly. So similar thing happens to stocks. So and again we teach you the Pristine method teaches us how to be objective in our analysis and be able to understand price action no matter what it is. I mean, no matter what the stock does, I can analyze it. Sometimes I'll say, like, this is too sloppy. I don't know what's going on here. This is too sloppy. Yes, but I can pretty much tell you what's going on. It had a breakout failure and is basing bearishly, but currently it's too sloppy. But this looks lower. And then the Pristine method teaches you, again, high probability repeating patterns that you can take advantage of, because they repeat so often. So that's what the Pristine method in a nutshell, I think. If you were in med today, would you have managed? I would have got, when a stock does this, and boy, we were talking about it in the meds today, before it triggered over $6, stop under 550, but I didn't do it. Didn't pull the trigger. When a stock does this, I just go bar by bar in the 1 minute. No sense in trying to manage it. Just go bar by bar. It's moving too fast. So just 1 minute, go to the smallest time frame possible and go bar by bar. So as soon as it takes out the prior bars low, you can just get out. Okay. Let's see. How do you close the position at what price? I close it at the bid minus 10 cents, at the offer plus 10 cents. If I'm short, then at the offer plus 10 cents. or just use a market order for closing your positions. That's fine too, to make sure you get filled. Just a market order, okay? But for I don't close the position at the bid minus 3 cents, or because then you might not get filled. I don't ever use the tick chart. No, I just use the level 2. So if I'm getting really tight with the stock, I close out of sterling. Apparently, I didn't know I even did. Let me see. No, I still have it open. So I start looking at the level 2. If I'm looking to get out and I don't want to keep going bar by bar, then if I'm long, as soon as the bid breaks, then I get out. Okay. So, but some level 2s are not really, you can't read them. They're not readable. They're not legible. They're just jumpy and all over the place. What would be the account size for $500 per trade? Probably $50,000. I mean, right now, every month, almost, not really, but I withdraw some money. I mean, almost every month. Now it's 200,000. Here, let me withdraw 75K right now, or 100K. I don't really mind. I don't need 200,000 for $500. Okay, so I don't need 200,000. I can do with 50. I can do with 50, but let's do, which account? I'm not sure which account. But I prefer to have 100. I prefer to have 100, basically. But 50 should be okay, I would say, for $500 per trade. Okay. What books more closely resemble your strategy helped you with your experience? Not a single book out there that I can recommend that would teach you the pristine method, basically. Not a single book. The books are mostly for entertainment or psychology, but books on technical analysis are useless. Every book. I'm not excluding any books, by the way. Pretty much they're useless, because they don't teach you a whole method. They talk about certain things. They talk about candles. So you do learn a little bit, but to put it together, it's pretty useless. I mean, books they don't put it together for you. Okay, let's see. Best time frame for entering on a pullback? There is no such thing. It depends on what you're trying to do. In the morning, off the smaller time frame. In the late afternoon, off the larger time frame. Let's see. If you get stopped out on a stock, do you re-enter the same side of the stock? Usually, it's best to avoid replays. Most people lose money by re-entering. I mean, the vast majority of people lose money by re-entering because you get emotional. When you get stopped out, you feel something, and so you get back in it, and then what happens? You end up getting stopped out again. You end up losing more and more. Okay. What average time in a trade? I don't know what the average time is. I don't know what the average, how long. Some trades, I was in a trade all day yesterday. I don't remember which one. Absolutely all day, from open till like close, but I don't remember which one. And today, some plays I was in for like 5 minutes. Do I post all the trades? Sometimes in the morning, I don't, because I'm on the mic. I have the microphone, and I'm telling you what I'm saying. Over $6 right here. I'm gonna get it, and it goes. So by the time it pops, I'm not gonna post it after the fact. But I try to call as many of the plays as possible. Okay. Do you buy with market orders? Since I already talked about this, Glenn, I don't buy with market orders ever. I don't even have a hotkey for that. Only for exits with market orders. Let's see. Any other questions? Should we call it a day for today? All right. Which do you like more, day or swing trade? It depends. Some years I certainly like swing trading more. Some years day trade, or some months, it depends. It depends on the market environment. I probably like swing trading a little bit more than day trading, to tell you the truth. I probably like swing trading a little bit more, because it's less stressful. It's less time intensive. I do all of my swing trading while listening to music after the close, basically. Is when I scan, when I put in my orders, all of that stuff. So I probably am more of a swing trader than a day trader, for sure. But some years day trading, is better than swing trading. Other years it's swing trading that beats day trading. So, and all I care about is making money. That's what I care about. Okay. Do you have a stop set up right into the ATM strategy? I don't have an ATM strategy, but I don't have a stop if I'm scalping the stock. No, I don't have a stop if I'm scalping because I'm watching it. I'm just gonna jump out as soon as it goes against me. How much of your profits swing versus trade? Again, it's different from year to year. Like, it's different from time to time. Last year, swing trading made like over $500,000 for me between swing trading and earnings. Day trading, was a lot less. This year, it's the opposite. Do you risk more? Yes, not always, but $1,000 per trade on the swing trades. For swing trading, you don't enter buy order, market orders. You have pre-filled buy orders ready to go. Yes, whatever that means. Yes, I have limit orders ready to go. Okay, E-minis, the ES is good to trade. I don't trade the E-minis. I don't trade the futures. Sure, Mark. All right, guys. I hope you are doing great, enjoying the open house. And I will... I'm going to answer one last question from John P. Because John P. has given me a lot of good plays in the room over time, so I wanna see what John P has to say here. I've listened to you say the same things every Tuesday, over and over. It never gets old, and it's starting. Look at that. I mean, John P, thank you. I thought it was a question, honestly. I appreciate it. But all right, I'm going to go ahead and step off the mic. I'll talk to you guys in the morning at 9 a.m. Hopefully, no tech issues. But I am gonna have my scanning system up and ready to go. In case my main computer goes down or something, then I can just switch gears seamlessly. Not like today. I wasted half the day trying to set up my layout. Thanks so much, everybody, and I will talk to you in the morning. Take care. Have a good night.